Growing a small account as a beginner can be quite challenging. Without having realistic expectations and proper risk management in place, you have better odds of going to the casino and gambling your money. If I had to restart from zero, I would do exactly what I'm about to share with you guys in today's video. I'm going to share with you actionable steps that you can take to grow a small account the proper way. So with that being said, let's get right into the video. So I'm going to break down exactly how to grow a small account. I'm going to start off with expectations, risk management. We're going to talk about scaling, long-term sustainability. I'm going to go through a personal example of how I grew a small account. I'm going to go through my strategies, and then we're going to go through some examples of the exact way to grow a small account as fast as possible. So growing a small account may seem more difficult than it is, but there is one thing to grow a small account fast, and that's simply to risk more money. And you might be saying, isn't this obvious? If you risk more money, you're gonna make more money. Let's say you trade with $100 and you risk all that $100 and you have a 1-to-1. That means you doubled your money. You just turned your $100 to $200. But is that long-term sustainable? Of course, it's very easy to say risk more money, but you have to think about long-term sustainability. Is it possible to keep doubling your account every single trade? Of course not, right? That's why I want to talk about some expectations and why growing a small account and doing it the right way is important. The first thing that I want to talk about is your percent recovery. We always think about the gains, how much money can we make, but we have to think about how much money can we lose. If we risk more money, what happens? We're gonna lose more money as well. The bigger the hole, the harder it is to climb out of. So if you're in drawdown, that means if we lose more money and our account draws down quite a bit, it's going to be harder to dig out of that hole. So as you can see right here on the right hand side, what I have is a percent recovery chart. In this case, if you have a 5% drawdown, what do we need to get back to break even? 5.3% is not that bad. But if we have a 20% drawdown, what happens? Now we're gonna have to make 25% back, or a 50% drawdown. Now we have to make 100% back, right? If we're down 50%, now we have to double our account to get back to break even. And that's a lot more difficult than being down 10, 20%. And if we're down 90% on our account, look at this. We're going to have to make 900% to get back to break even. So on the first slide, as I mentioned, right, risking more is a very easy way to grow a small account, but you don't think about the actual money that you lose. If you lose 90% of your account in one trade, then it's going to take a 900% return to get back to break even. And of course, that is not realistic. So as you can see, the compounding effect goes both ways. As we're compounding and we're making money, it's all sunshine and rainbows. But when we start losing money, it also happens to the downside, right? Most people only think about compounding up, but you got to also think when you're trying to grow a small account, you're usually going to risk a little bit more capital. So sometimes there's a compounding effect that goes towards the downside as well. So that's why we have this percent recovery chart, and understanding this is very important. And what also happens is when traders start losing, too many traders risk too much money. They want to make that money back as fast as possible. They want to start doubling their risk to get back to break even. And that just kind of spirals and spirals until you already know it, you're down 50% on your account and now you have to make 100%. And now it's a lot harder to get back to where you originally were. With this being said, now let's talk about why risk management is the single most important thing when trying to grow a small account. So if we want to grow a small account properly and the right way, what do we have to do? And we have to start treating trading like a business, right? This is the number one most important thing when it comes to trading. And it's essentially having the mindset of think like a professional and not a gambler. What would a professional do, right? Do you want to make money consistently in the long term, or are you just here to make a quick buck and you're looking for a quick dopamine hit, right? That's the questions that you have to ask yourselves. And the number one most important thing, as I mentioned, is risk management. And what we're going to cover in this risk management aspect is number one, trading capital. How much trading capital should you start with if you're trying to grow a small account? And then we're going to hop into the risk per trade that we should be taking. the risk to reward when looking to take trades, your win rate, and does that matter? And of course, what we have is our maximum drawdown to protect our capital, because making money is one thing, but keeping it and growing it is another. So how much money should you trade with is the question that everyone always asks when starting out. And the answer is fairly simple. It's how much money that you can afford to lose. There's no right or wrong answer here, and there's no one answer that fits all. It's money that you can afford to lose. This can be $500, $1,000, $10,000, $20,000. It's money that you can afford to lose in the markets, but you have to come in with the mindset that you're most likely are going to lose the money, especially if you're trying to grow a small account the very first time, you're going to lose the money. As a matter of fact, I can almost guarantee you that you're going to lose the money. So start off small and build those systems in place so you're able to effectively grow the small account in the long term. When we're talking about risk per trade, one of the rules of thumb in the overall market is that you should risk no more than 1% of your total trading account. I know it might not seem like that much. If you're risking, for example, you have a $1,000 account, all right, you're risking 1%. What is that? $10, right? $10 is your risk, right? This might not seem like a lot. A lot of times, if you're looking for a 1 to 2, you're risking $10, right? That means the max you're going to make is $20 in the market. Is this appealing to most traders if you're only going to risk $10 and make $20 per trade? No, but that's what you should be doing, is risking 1% of your total account size. But you can see if you have a 25K account and now we're risking 1%, what does this equate to, right? This equates to $250 worth of risk. So if we're risking $250 and now we're looking for a 1 to 2, that means you can actually make $500 per trade. So you can see right here, 1% across a few different account sizes. And then on the right-hand side, right, for a $100,000 account and you're risking 1%, that means you're risking $1,000 per trade. And if you're looking for a 1 to 2, that means you can look to make $2,000. $2,000 is a lot more than $20, but they're both risking 1%. And you can see right here, the difference between these examples is the amount of capital. So if you can build the right foundation and you can build the right systems in place, once you get the capital and you start growing your account, you can see how this compound effect happens. And of course, if you're risking $1,000 per trade, now you're actually making a significant amount of money. What you don't want to do is risk 100% of a $1,000 account, because you want to make $2,000 per trade. That's just not realistic and that's just not sustainable. I know most of you guys are probably not going to take my advice and you're still going to do it anyways, but that's fine. Sometimes you have to learn on your own. So risking 1% of your account is the industry standard, and that's what you should be doing, especially if you're a beginner, right? If you're more experienced and more advanced, you can look for different risk parameters. But strictly speaking, if you're starting out, risk no more than 1% of your total account size. Next slide I have is two traders. So I have trader A and I have trader B. They both have a 25K account, as you can see here. Right? One has a 1-to-1 risk to reward ratio. One has a 1-to-2 risk to reward ratio. One has a 75% win rate and another one has a 50% win rate. In this case, you would think maybe the 75% win rate trader is going to make more money because they're winning more, right? They're winning 70% of the time compared to a trader that's winning 50% of the time. But as you can see here, they make the exact same amount of money. So you can see trader A profits $7,500 and loses $2,500 with an ending balance of $30,000. And then trader B profits $10,000 and loses $5,000, and they both end the balance with $30,000. And of course, both these cases, they're risking $1,000 per trade and they're taking 10 trades in total. So you can see in this case, risk to reward when it comes to trading, there's a little bit of a misconception. Most traders think that you need to have a super high win rate in order to make a lot of money in the markets. And that's just not the case. As you can see right here, both of them have a different win rate, but as you can see, they both end up making the exact same amount of money. And what I really want to talk about is your risk to reward. So the misconception here is that a high win rate does not equal success, as I just proved to you guys in the last slide. And what really matters is your risk to reward ratio. So you can see right here what I have is your risk to reward ratio. And essentially what this means is if you have a 1-to-1 risk to reward ratio, that means for every $100 that you risk, you're looking to gain $100. So it's a 1-to-1, right? You're risking $100 to make $100. If you have a 1-to-2 risk to reward ratio, what does this mean? That means you're risking $100 and you're looking to make $200. In day 1 to 3 is you're looking to risk $100 to make $300. So understanding risk to reward when it comes to trading is very important because there's different trading styles, there's different traders, there's different risk parameters, and really depending on your strategy and your personality as a trader, it really depends on what fits your personality the best. And that's what you have to figure out. I'm going to show you my statistics and how I personally grew my small account, but this is really going to change from trader to trader because no trader is exactly the same as another trader. So what I have here is your risk to reward and your win rate cheat sheet. So you can see right here, what we have is a 1-to-1. If you have a 20% and a 1-to-1, you're losing, right? 30%, you're losing, 40%, you're losing, 50%, you're break even. So it means you win half your trades. And of course, if you trade a 1-to-1, $100 risk, $100 gain. If you have a break even at 50% batting average, you're just going to make no money. You're probably going to lose money with fees as well. But if you have a 60% win rate, then you're going to be in slight profit, as you can see here. If you have a 1-to-2, you have a 20%, you're still losing. 30%, you're still losing. 40%, you're in profit. And 50%, this is where I lie in when I'm trading, right? In this 50% mark, right, you're going to make a lot of money. If you have a 1-to-2 risk to reward ratio and you have around a 50% win rate, you are going to become a very, very profitable trader. And so forth, as you can see right here, 1-to-3, if you have a 40% win rate, you're going to be very profitable. A 50% win rate, super, super profitable, and so on. As you can see right here, the risk to reward cheat sheet is very important, especially understanding the difference between different strategies, the different entry models, the different criterias, market conditions. Understanding this is going to be very important. If you have a higher win rate, that means you're going to have a smaller risk to reward ratio. And if you have a higher risk to reward ratio, that means you're going to have a lower win rate. You can't have both. There's no single trader in the world that's going to have a high win rate plus a high risk to reward ratio. That's just not going to happen. And that's just unrealistic, especially in the long term. So with this being said, let's go on to maximum drawdown. So this is the last part of risk management, and I feel like it's very important. Maximum drawdown is the amount of money you're willing to lose at any given time. So this is very important, especially if you're trying to grow a small account quickly or the right way. Having these risk parameters in place is going to help protect you. The max amount of your money you're willing to risk at any given time, this can be a daily max drawdown, a weekly max drawdown, or a total account size drawdown, depending on a dollar amount or a percentage amount. These things are very important. And the way to calculate this is after figuring out everything else. In this case, if you have a 25K account, your maximum drawdown in one day should not exceed $2,500, right? This is a pretty big drawdown, right? Let's say you're risking 1% per trade. This would mean you have to lose 10 trades if you're going to lose $2,500, assuming that you're risking $250 per trade. And this is something you have to figure out. As I mentioned, you want to have these rules in place so you don't go on tilt or you do something stupid. Because as a trader, right, you can have a string of winning trades. You can be green for months on end. And if you do something stupid where you revenge trade, and in one day it can take you out. So you have to have these rules in place. And the ways to do this is you want to have a broker limit, or you have a mental stop where no matter what you do, you have to stop trading once you hit your maximum drawdown. Because after you hit maximum drawdown, right, nothing good happens after that. So with this being said, now let's go on to some things that can help grow your small account. So there's one thing right here called the compound effect. And essentially what the compound effect means is that you start off small. When you start off small and you're growing a small account, you're not going to see the returns that you probably want to see, especially if you're risking 1%. But as you grow your account, and if you want to grow it exponentially, if you start risking 1%, as your account grows, you're going to see what's called the compound effect, and your gains are going to start adding up, right? We're going to start off slow, but over time, if we can grow our account consistently, what we're going to have is this exponential effect where we end up risking more money because our account grows as well. So this is the compound effect, and usually this is what a healthy chart looks like. What you don't want to see is big volatile spikes in your trading where you have consistent ups and downs, right? The best way is to have consistent growth over time. And that's by having consistent gains and doing the same thing over and over again. So right here, you can see what we have is our exponential growth calculator. Right here, you can see if we start off with an initial balance of $3,000 and we have a monthly return of 5% and a yearly return of 80% compounded, what does this give us? This gives us a potential earnings of $53,000 in 5 years. And this is fairly conservative if you're risking 1% on your account. So right here, you can see what we have is a starting balance of $3,000. Year one, we have a $5,300 balance. Year two, we have 9,000. Year three, 17. Year four, 31. And then year five, we have 56. And you can see how that compound effect works. We go from making $2,000 per year to making $28,000 per year by year four. And this is just by strictly compounding growth. If you consistently do the same thing over and over again, but once you grow your capital, you're going to end up making a lot more money. This is cool and all, but now let's go on to an actual example of when I personally grew a small account from $3,000 to $50,000 in 57 days. If you guys want to watch the video on exactly the strategy that I use, everything, I'll leave a video in the description below. But as you can see right here, what I have is I started off with $3,000 and I ended up turning this into 50K in 57 days. And you can see the chart right here. I didn't make this all in one trade. What happened was I consistently grew the account over time. And as you can see right here, what we have is an exponential graph similar to what I mentioned from before. So what happened was I slowly started to compound. You can see I made majority of my profits as time went on. As you can see, the main thing I want to talk about is that base hits add up. And you can see right here, based off my statistic, is that I never had a crazy outlier win. What I did was go for the base hits approach, especially if you're trying to grow a small account. What's good is you build that confidence. Once you start having a string of winning trades, right, it's easy to build more confidence, and that's where you have that compound effect and you can grow your account fairly quickly, especially once you understand and you know what you're doing. So you can see right here, all I was doing was focusing on base hits and trying to hone in on my system and my strategy. You can see the first month, I don't know, trading 19 days, I made $12,000 from $3,000. And then you can see right here in March, I ended up making $14,000. So it was a little bit of a jump from the previous month of 12K. As you can see, I had a few red days in between, but of course you're always going to have drawdown periods, right? You're never ever going to just move up in a straight line. Of course we would like that, but there's going to be periods where you have some red days, some red weeks, sometimes even red months. But as long as you focus in on your system over time, right, you're going to make money as long as you have a simple and repeatable system. And you can see in month 3, I ended up making $21,000, and you can see the compound effect in how it worked, right? I started to make more money, right? 7K in a few weeks, 6K in a few weeks, and then 8K in a few weeks. And that's where the gains really started to add up, is when I started gaining more consistency, I got more confidence, and I started to size up. And that's how you grow a small account, is by having those base hits and slowly building that confidence and gaining those convictions in your trading system. You're going to go from 1 contract to 2 contracts to 3 contracts, and you're going to slowly move your way up, because not only do you have to focus on your actual system, one thing I'm not mentioning here is your psychology, and that's going to play a big factor into your trading. So you want to keep it as mechanical as possible, and you don't want emotions to play as big of a role as it has to be. Of course, we're going to have emotions when it comes to trading, but we want to keep your system and everything else as mechanical as possible, and we don't want it to be discretionary. And these are some of my statistics that I have when growing my small account. We're at a 38% win rate. This might seem like a shock to most people when you first look at this, is I had a 30% win rate. I ended up growing an account from 3K to 50K in 57 days with a 38% win rate. And the reason being is this is what's important, is your average win to loss ratio. So you can see right here, I had a 2.76 risk to reward ratio. That means for every single trade, I was making $446. And then every trade I was losing, I was only losing 162. So having this risk to reward ratio, as I mentioned earlier, right? If you have a higher risk to reward ratio, that means you're going to have a lower win rate. And if you have a higher win rate, you're going to have a lower risk to reward ratio. And you can't have both. Of course, some months you're going to have a higher win percentage and maybe a higher risk to reward ratio. But over the long period of time, right? If you have as I mentioned, around a 50% win rate. With a 1 to 2, you're going to be a very profitable trader. And the profit factor I had was a 1.6. Day win percentage was a 90% as well. So what I like to do when I'm growing a small account is I like to have consistency, right? I like to try and be as green as possible. Of course, having a 90% day win percentage is fairly impressive, and it might not be as realistic if the market conditions aren't really favorable. But if you can have those base hits and you can try and end the day off green, right, over time, you're going to build that consistency and you're going to build more confidence. And that's going to allow you to scale up as you're winning. Some more statistics, as you can see here, what I have is the time of day. As you can see, this is all in Eastern Standard Time. So actually, right, whenever I traded around 9 o'clock, in the hour of 9 o'clock, I actually lost money. So I actually lost money at 9 o'clock. So for me, I try and stay away from trading within the first 15 to 30 minutes because generally speaking, I'm losing money based off these statistics. If I trade at 10 o'clock or 11 o'clock, right, I'm very profitable. So I'm going to be looking for trades in between these time zones, between 10 and 11 o'clock. Besides that, I don't take any trades really after 11 o'clock. Majority of my trades that I take are between 10 and 11. So I'm going to focus in during those times of days, right? You have to be able to track these statistics if you want to grow any account size, right? Having these statistics tracked, you can do this on Notion, Excel, any sort of trading journal is going to provide you with these statistics. And having these statistics, not only understanding the time, right? You can have the ticker, right? How much money you can make, right? There's a lot of information that's important if you want to grow your account, because at the end of the day, it's all based off of probabilities. So you can see right here, this is my statistics for time in trades. As you can see, actually every single trade that I took that was underneath 5 minutes, I ended up losing money on. Where I made most of my money was 5 to 10 minutes and 10 to 30 minutes. And you can see right here, right? If I'm micro scalping or if I'm looking for quick moves under 5 minutes, I'm most likely going to lose my money. So I'm going to try and focus in on higher time frame setups, and I'm going to look to let the trades play out a little bit more. So as I mentioned, these things are very important to understand and to track, of course. And as you can see here, my average hold time on most trades are 8 minutes, average winning trades around 5 minutes. And as you can see right here, the most money that I made was on one single ticker. And that's what you want to focus on, something that's repeatable and that's going to set up every single day in the markets. You don't have to trade plenty of names. You can just focus in on one ticker, understand the personality of the ticker, and it's going to be a lot easier to trade and make money if you're focusing on keeping it as simple as possible. When you're looking at too many tickers or you're looking at too many time frames, right, you might get a little bit distracted. If you can make your system and process as simple and mechanical as possible, and what you get from that is repeatability and consistency. So now what I have is the strategy that I use to achieve these results. And I still use the exact same strategy that I do to this day. And it's simply just looking for the key pivot high to turn into your key pivot low. As you can see right here on the left-hand side, what I have is a pivot high. We have that break above. And then what we're looking for is the retest for a continuation push towards upside. My risk just underneath this, and I'm looking for a 1 to 2 and a continued push towards the upside. The downside, as you can see here, we have our swing low, break underneath our swing low. We end up using this area as a retest, risk just break above, and we're looking for continuations towards the downside. This is the exact strategy that I use on Tesla. This is the exact strategy that I use to this day. And now let's go on to the setups and rules that I use to allow me to grow the account in the time that I did. Right? Some setups that I look for is the 1 minute opening range break and retest. Another one, 5 minute opening range break and retest. Key level break and retest. So these are the three that I use on a consistent basis. I don't look for anything else outside of this system. I'm looking for quick scalps as well. I'm trading for the first 2 hours of market open. I'm trading from 9:30 a.m. to 11 a.m. Eastern Standard Time every single day. I'm looking for quick moves. And as I take profits, all I'm doing is looking for high of day and low of day and a 1 to 2 risk reward ratio. So it's as simple as that. And I keep it as mechanical as possible. And that allowed me to grow my account. Now let's go on to some examples and see exactly what this looks like in real time. As you can see here, some of the examples I've pulled up are recent examples. This is all from last week. So as you can see right here, this was on Apple towards the downside. And all I'm looking for, as I mentioned, 1 minute opening range break and retest, 5 minute opening range break and retest. And I'm just looking for quick moves, high of day, low of day, or 1 to 2. This was on Apple. as you can see right here, what we have marked out, our 1 minute opening range, price breaks underneath, taps into this key area. This is where I look to go short with a stop, as you can see, just a break above. And all I'm looking for is low of day and a 1 to 2 risk reward ratio below. This is the exact same trade that I took, and I'm making $3,100 on this day. You can see it actually set up once again. This is the first trading opportunity, which was your 1 minute opening range break. And you have another trading opportunity actually, which is now your 5 minute opening range break. As you can see right here, price ended up breaking underneath, right? Taps back into your 5 minute opening range break. This is where you could have looked for a re-entry or potential another trading opportunity. And you can see price rejects off this level. And then we end up having another push towards the downside for a 1 to 2. So it's as simple as that. I'm looking for a trend in the markets. I'm looking for your 1 or 5 minute opening range break. And all I'm doing is looking for high of day or low of day or a 1 to 2 risk reward ratio towards the downside. Another example, this was on Tesla. As you can see right here, I ended up making $6,400 on this one. As you can see right here, what we're going to mark out our 1 minute opening range break. As you can see right here, 1 minute opening range, price breaks above with displacement, comes back, retests this level. All you're doing is looking for a high of day and a 1 to 2. I ended up taking the 5 minute opening range break and retest. As you can see here, this is your 5 minute opening range in combination with your pre-market highs as well. Price broke above, came back down, retested, stop, just a break underneath, and we're looking for a 1 to 2. This ended up having more continuation, so that's why I ended up making $6,400. But if you're just looking for a quick scalp, all you're doing is looking for the reaction around these key areas, and you're just looking for a 1 to 2 towards the upside. And as you can see, another trade example. This was Tesla the day after from the previous example. Another one, if you're marking out the opening range on the 1 minute time frame, price breaks underneath, comes back down, retest. You could be looking for an entry with a stop just to break above, and you're looking for a 1 to 2 towards the downside, right? Just a quick move in the market. And then you can see another retest was happening, which was your 5 minute opening range break. This is where I got in with a stop just to break above. All I was looking for was a quick scalp towards the downside. I ended up making $1,300 on this one for just a quick move towards the downside. And you can see, right, these setups repeat often in the markets. 5 minute opening range breaks, 1 minute opening range breaks. All you're doing is looking for a high of day or low of day move towards the downside. And you'll see if you go back test this yourself, I have plenty of videos talking about the 1 minute opening range break, the 5 minute opening range break. If you go back and look at the charts, you'll see plenty of opportunities where you could be looking for these quick moves in the markets. And as you'll see, once you start getting those wins and start having those base hits, these base hits add up. So with this being said, some key takeaways from this video is number one, having realistic expectations, right? Trading at the end of the day is a get rich slow scheme, right? Most people come into the markets looking to get rich quick, right? They can make a lot of money at the start, but you'll realize that the faster you make the money, usually the faster it leaves. So trading, make sure you plan for the long term, right? Are you in this for the long term, or are you in this for the short term gains, right? Anything in trading or anything in life in general takes time, right? It takes time. So risk management is the single most important aspect of trading. And one of my favorite quotes is, it doesn't matter about how much money you make, it's about how much you keep and how you can grow your capital. Anyone can make money in the markets. Making money in the markets is a 50-50, right? So it's not hard to make money, but what's hard is keeping the money and actually growing the money. That is the hardest part in trading. And that's the one thing that most traders need to work on, is how you can keep the money and actually grow your money consistently in the long term. Hopefully you guys found this video useful and found some tips that you can take to help you grow your small account this year. If you guys did enjoy that video, I appreciate if you guys drop me a like and sub. And with that being said, I'll see you guys next week for a brand new video. Peace.